for everyone out there like me that spent all this time and energy and created the perfect property over and over and over again and dealt with contractors and spent so much money. And yes, you're making money, you made equity, you're making cash flow, but it's still only worth what it's worth based on the comps in that neighborhood. What is up, everybody? Welcome back to the show. I am your host, Kassidy Warren, and today I am going to convince you without a doubt that buying hotels is the better option than buying single-family homes or residential Airbnbs. And so we're talking benefits of buying commercial, but all the reasons why I'm going all in on hotels and experiences and creating something in the hotel space and getting rid of all of our Airbnbs and not investing in any more single-family residential. And I'm going to tell you exactly why. And so for those that don't know, I've acquired over $13 million in real estate, mainly short-term rentals, but I am buying hotels. Bought a hotel in Solvang, California with partners back in April. I have 2 other hotels under contract currently, and am going to be continuing to buy hotels and commercial real estate into the foreseeable future while we are selling our short-term rental portfolio. All right, so let's get into it. The thing with Airbnbs, and if you've been in the game for a while, you saw the boom, and now you're seeing kind of the level off. Some areas are doing better than others, but I believe that there are only 4 types of Airbnbs that are going to survive beyond 2025. And here they are. So the first Airbnb that's going to survive is the large mansion, large property that can sleep 16, 20, 25 people or more on a big piece of land, or at least it can fit, a ton of people. The family reunion spots, full amenitied out. Maybe there's a putt-putt, there's hot tubs and saunas and video game rooms and pool tables and movie theater rooms. These are unique products that hotels just can't compete with, and especially on price. So that's where you can get, $1,000 a night, $2,500 a night, $4,000 a night on these properties because it's cheaper for families to go and stay there all in. So that's going to survive. That will always be a product that is available, whether Airbnb exists or not. The other Airbnb that will survive are unique stays. This is the potato, the cowboy boot, the geodomes, the very unique one-off, non-scalable stays that generate probably a ton of cash flow for people. So again, hotels and brands just can't compete with these types of products, and they're only going to be available really on Airbnb. The third type of Airbnb that is going to survive is going to be the hotel alternative, or the budget couple or couples stay, where for someone like my wife and I, where we like to have a kitchen when we travel because we make our own food and we don't want to go out to eat all the time. We like to stay in an Airbnb in a good place in town that is an alternative to a hotel. Maybe it's a little bit more expensive, maybe it's cheaper, but it provides something a little bit better, a little bit more space. Maybe it's a 2-bedroom unit that you can sleep 2 couples, and overall it's cheaper to do that, or at least it's a better experience than just a hotel room. You get a little back patio, that sort of thing. But there's not a ton of money to be made, and those, I don't think there's not going to be a ton of those around because it's just going to get more and more expensive to operate those. So love those. But the fourth Airbnb that's going to survive is what I call the core product. This is the 3-bedroom, 2-bath, 4-bedroom, 3-bath, regular home, basically a regular house that is extremely well designed, extremely well operated, has all the amenities that you want. The photos are top notch, automated messaging, digital guest book, basically the cream of the crop of the core product. So if you have 100 options in any given city, these are going to be the top 5 that everyone books. The other 95 are going to struggle to make cash flow because they're all going to be relatively the same products, or unless there's an event and people just need to stay somewhere. But the competition is going to be so high in the core product that you're going to need to go all out on design and amenities. You're going to need to spend a bunch of money on renovations and creating something, a ton of money on all the stuff that you stock for the kids or your guest avatar. And the core product, you're going to have to really try and put a ton of effort into creating something that's going to be able to compete. So there's a lot of these homes available, both to buy on Redfin and Zillow, but there's a lot of these available on Airbnb. So you really got to stand out. So those are the 4: mansion, unique stay, budget couple, and core product. And so the reason that I mentioned that is because I would focus, if you're going to stay in Airbnb, I would focus on that. But we're talking about hotels. And so one of the reasons that we're getting out of Airbnbs, one is the regulations. And I have seen it firsthand in the state of Michigan, where we are investors in a property called Orange Cadillac. You might know the Carwells, but we went into that and we thought we were going to make a bunch of money, and we thought we were zoned commercial. And basically the city came in and did everything they could to stop us and prevent us and shut us down. And they did shut us down. And so there were cease and desist letters, and there was city council meetings, and there was misinformation. And it was a ton of work that I didn't have to do all the work. Sarah, our partner, she did a ton of work with the city, with lawyers, with everybody, with the house, on top of just getting the property ready. And so all this effort went into paying and building and renovating, and then trying to prevent us from getting shut down, that we still got shut down just for a house, just for a house. This isn't even for a multi-million-dollar hotel building. And so there's other areas that this is happening to and will continue to happen over and over. And even in the red states, in Dallas, in Nashville, in all these other areas, you're seeing regulations come into play where you thought you might not have before. And so if you are going to invest in an Airbnb, go to a state like Arizona, where you're protected at the state level, or where there's existing regulations like San Diego, or we have a property up on Orcas Island where there are permits that are issued, they're capped, but you can grandfather in. And so go find areas like that. But again, if you're going to a hotel or commercial, you don't have to worry about this. So let me tell you a little bit about my buy box and what I'm buying and why I'm buying hotels. So I look for hotels that are between $2 to $12 million. And actually, I'm shifting that up. It's closer to $4 to $15 million, because I want my time and my effort, my energy to be worth it when I go and buy something. But that price range, it's too big for individual investors. So a single person looking for a hotel that's not going to raise money, they can't really go above 2 to 3 million. It's just generally too big for someone that's buying individually. At the $12 million price point, that's where hedge funds start to come into play, where traditional investment money comes in. The BlackRocks, the Vanguards, I mean, they're not buying at 12 million, but you get the idea. And so in that $2 to $12 million range, that is a wedge market where there's not as many people looking for deals. There's less sophistication in people looking for deals. And you're looking at people that are syndicating or raising money. And in that range, it's a lot of baby boomers that are trying to retire, and they bought this property years ago. They ran it as their hotel, and they want to sell it. They want to get rid of it. And so this is creating a huge opportunity for people to come in and buy these properties at a discount, because they usually have not put a ton of effort into them, a ton of work, or a ton of money. They've just ran them as the same as always. They've had to cut staff. They've had to cut corners. Maintenance is deferred. So there are these assets in really well-performing markets that have just been neglected. Just like on the residential side. If you've seen what I've done in the past with our properties, we found properties in great neighborhoods that have been neglected, and we've come in and done amazing things with them. And so you just have to apply the same principles to commercial real estate. The language is generally the same. The principles are generally the same. You just got to find the people that have done it and find the right deals. So in this $2 to $12 million range, typically what I'm finding is it's baby boomers or their kids that don't want to run the hotel anymore, but they still want to get a good price, but they're willing to do one thing that in a lot of residential deals, people don't do, and that's seller financing. Seller financing is where the seller actually acts like the bank. You don't have to go to the bank to get a loan. And I would say about 50% of the deals that we come across, right off the bat, the seller is willing to entertain seller financing. And the reason that that's a benefit, and it can be a benefit to the seller as well, is one, we don't have to go to the bank and go through all the hoops of doing that. We get a better interest rate generally, and it's a lot faster closing. So for the seller, it's a benefit because they can avoid a big tax event by not selling and actually becoming the bank. So they would only be taxed on the down payment that we give them. So they like that. They like us giving them a smaller down payment, and that's their money that they get to keep for however long. And then we pay them monthly payments. So it's like their retirement. It's like they're getting a retirement check where we're paying them monthly or quarterly payments. So they really like that. And typically it's at an interest rate that beats the market, but it's cheaper for us than what we can currently get. So this is a situation where it works for everybody. And then the other reason on why hotels is, one, there is a shift to hotels, right? And so in terms of commercial real estate, boutique hotels and hotels in general, I think there's a big opportunity right now. If you're choosing between multifamily, industrial, residential, I'm looking at boutique hotels because of the opportunity of all these different things that I'm talking about today. And so everyone's shifting from Airbnb into hotels. And so there's less demand on Airbnbs overall, or there's more competition. And a lot of people are shifting back to hotels. And then there's a lot of these distressed assets out there. So the other piece, and I've talked about it in a previous episode, is forced appreciation. So this is the thing that sort of really flipped the switch for me to switch from short-term rentals over to hotels, is the forced appreciation. Because on our Airbnbs, what we were doing is we were doing all these renovations, we were doing all the design, all the project management. I was so burned out from all this work. And I was doing the math, and yeah, we were making good money on the cash flow, and we had improved the properties pretty decently in terms of equity. We rode the boom through COVID, like all that. But it still didn't feel like enough. It still didn't feel big enough for the amount of time and effort and energy that we were putting in. And so when I learned about forced appreciation, that's when everything changed for me. Forced appreciation is where the value of the property is based off of the profits that you bring in every year. So if you increase profit, and for everyone out there, I'm talking about NOI, but I'll use the word profit. If you increase the profits of the property, you then increase the value of the property. And so if you can make improvements, if you can run it better, if you can reduce expenses, if you can find ways to make more money through spa fees, resort fees, pet fees, that all increases your profits. And there's ways to do that without a ton of effort and not even having to do a bunch of renovations. So for example, if there's a manager's unit, and a lot of these hotels have manager's units where the manager lives on site, or they used to, and that's traditionally how the property's been ran, but maybe you don't need a manager on site anymore and they can live nearby, and you do self-check-in or staff light models, and you can convert that manager's unit into another room or maybe two rooms, because they're usually a lot larger than traditional rooms. That means with a little bit of cost, but no additional monthly expenses, right? The additional monthly expenses by converting the manager's unit is very nominal, very little. You've now added, let's say you've added another 50 grand to profit, to NOI for the property. In an average market, that means you've added another $500,000 to the value of the property. So you are adding one extra room by only paying a little bit more money in renovations. You add $50,000 a year to your bottom line, and you increase the value of the property by 500 grand. You created 500 grand of wealth just by converting a manager's unit into another room. So this is the power of commercial real estate. By you running the property better, you are able to increase the value 2x, 3x, 4x, depending on how well you do. That is not possible with Airbnbs. For everyone out there like me that spent all this time and energy and created the perfect property over and over and over again and dealt with contractors and spent so much money, and yes, you're making money, you made equity, you're making cash flow, but it's still only worth what it's worth based on the comps in that neighborhood. You could be generating a ton of cash flow on an Airbnb, but it's still only worth what it's worth in that neighborhood. For hotels, if you generate more profit, you've just added 10x your dollar, right? So for every dollar in profit, you're 10xing the value of that on the value of the property. So that was everything that changed for me, was when I figured that out, when I learned that. And that's how wealth is created, is through the forced appreciation in commercial real estate. All right. The other reason for hotels, especially compared to Airbnbs, is it's a bigger business. It's a standard business. I mentioned it earlier about regulations, but the other thing is zoning. Homes are not zoned to be Airbnbs, and so that's a problem. Hotels are zoned to be hotels. So hotels are zoned to be hotels. And that means that you can get regular lending. There's all this stuff that you can do that makes things easier. It's a standard product. The other thing is you can partner with people. You can bring in partners. You can bring in people that know what they're doing. There's more to go around. And you don't really want to be doing everything on your own. Hotels are a team sport. Commercial real estate is a team sport. You don't want to be a lone wolf taking down a 20 unit, 30 unit, 40 unit hotel. There's just no way you're going to be able to do it on your own. And then there's more money to go around to hire professionals. So as an Airbnb owner, everything was really on my shoulders, my wife and I's shoulders. We had to buy it. We had to close on it. We had to fund it. We had to project manage it. We had to operate it. We had to design it. There wasn't a ton of money, even though we did really well. There wasn't a ton of money to go hire professionals in design, professionals in project management, professionals in this. We had to find ways to cut costs. And the same is true for hotels too, but there's more people that are doing higher end professional work in commercial real estate. For the Solvang Hotel that we closed on back in April, we were able to hire a landscape architect that did 3D renderings, that picked out everything for us, that didn't need a ton of guidance, that didn't need a ton of poking and prodding. They were professional. They really wanted to work with us. We wanted to work with them. You can hire teams. The other thing is, on the hotel side, the property manager is really crucial in terms of running your property, but they do everything, and they don't do it for a 20 to 30% fee. They do it for much less. The reason the Airbnb property management fees are so high is because it takes a lot of work. And so they need 20 to 30% of your revenue, because your revenue is not high enough on an Airbnb. And that just became industry standard to hire the right people. With hotels, the revenue is high enough that you can hire a property manager for 5, 6, 7, 8%. And they're going to do a really good job. And they're going to handle the financials. They're going to hire staff, train staff, make sure people show up. They're going to help you with other things, with marketing. There's a lot that hotel property managers will do. And because there's more of a selection of professionals that have been doing this for such a long time. So I just wanted to note that like moving into the hotel space, it's just a different level of talent, right? There's really good people in Airbnb. There's really talented people in Airbnb and residential real estate. But once you move up into hotels, there's just another level of expertise that comes along with that. And so my desire for hotels, especially moving forward, is really building experiential hotels out in nature with integration of the landscape, integration of nature into the designs of the buildings, because I want separation and privacy, wellness integrated in, sauna, cold plunge, and I want the design to match the feeling that I want people to feel. And so I'm just starting on my hotel journey. I bought one. I'm under contract on a couple others. But my goal is to build experiential micro resorts and resorts in general that evoke emotions from people. And I've done that on the Airbnb side, but it's just a different thing. And when the travelers have direct access to you as a host, direct messaging you as an owner and a host, and some of them are unwilling to search for the tongs for the barbecue, or they're, all the guest issues that we experience. There's something different about that versus creating an experience of privacy and integration into nature at a hotel. And there's something easier about operating a hotel than there is about an Airbnb. There's something more satisfying and fulfilling for me about creating these types of things in the world than doing the residential. And one of the last things that I wanted to note and to mention about this is we are using homes. If you're buying a home in a residential neighborhood, technically you are using that to rent to people on a transient basis. And you can say whatever you want about how you feel about doing that versus creating a place to live for somebody. But it's something that's been weighing on my heart a little bit. And it does make more sense to, yes, use it as an investment, but then sell it and give it back to people. So holding on to something as an Airbnb in a neighborhood forever may not be the right thing. Traditional vacation destinations definitely make sense. But that's just something that's been weighing on me. And so if I can build something beautiful that the community loves versus something that the community wants out, that's going to feel a lot better. And now I'm still going to do it. We're still going to buy Airbnbs, but we're going to do luxury flips in amazing neighborhoods, likely with bigger lot sizes, in areas that have existing regulations or were protected. And so we're still going to do that. But really, for me, it's about creating experiences, working with top designers. I want to work with the best designers. I mean, the Austin proper and Santa Monica proper hotel group, they worked with Kelly Wersler to design everything. And that's like a big dream of mine, is to work with the top designer to create a string of hotels that are integrated into nature and incorporate wellness. And so you're going to see that that's what I'm going to be working on and focused on. My goal in 2025 is to break ground on the first of those. And so I've got some other things in the works. I'm really excited to bring you guys along with this. Continue to invest in real estate, continue to work on your journey, continue to take the steps that you need to take to invest in real estate. It's okay if it's an Airbnb. Don't let me sway you. I'm just telling you what I learned, and that I wish somebody would have told me early on, and I would have gone into commercial real estate probably from the beginning. But I'm really grateful for the journey that I've had in this. And I'm really excited to share with everybody the journey of building these resorts and building these experiences and creating wellness in nature and having a lot of fun doing it. So follow me on Instagram. I'm at Kassidy.Warren. That's Kassidy with a K. And as always, I love every single one of you. Appreciate every single one of you. Thank you for listening. Until next time, peace.